Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine inflation for July has come in at 0.9%, near a 6-year low. The result is slower than the median estimate in the Business World poll. 0.9 is also within the Bangko Central's inflation range estimate for July. The Bangko Central's 2025 inflation forecast is at 1.6%. We get immediate reaction from the research head and chief economist of Security Bank, Angelo Gelo Taninco. President Marcos is set to meet with Indian Prime Minister Narendra Modi this morning. We speak with the chairman of the Federation of Indian Chambers of Commerce Philippines in New Delhi, Rex Darianani. The Agriculture Department recommends the suspension of rice importation and increasing of tariffs to protect local farmers. The Philippine Statistics Authority released data showing headline inflation eases further in July. National statistician Dennis Mapa announces the Consumer Price Index, or CPI, fell to 0.9% in July from 1.4% in June. The slower rise in prices was mainly driven by easing costs in housing, water, electricity, gas, and other fuels. July's figure is lower than the 4.4% posted the same month last year and below the 1.2% median estimate from a Business World poll. The print also falls within the Bangko Sentral ng Pilipinas' forecast range of 0.5 to 1.3% and marks the lowest inflation rate since October 2019's 0.6%. To see how inflation trends are affecting everyday lives of Filipinos, we go now live to mobile journalist Merimon Reyes, who's at a public market in Manila. So, kamusta na dyan, Merimon, after the inflation results?
Good morning, Cathy. While merong nakikita dito na slow inflation, most of the vegetables na binibenta dito sa market ay nakakaramdam naman ng mataas na pagtaas ng malaking pagtaas sa presyo nito. For example, ang carrots dati around 250 pesos per kilo kaya raw nilang ibenta, pero ngayon 280 pesos na per kilo ang bentahan ng mga karot. Ang pulang sibuyas naman, around 160, 150 pesos even, kaya nila itong ibenta per kilo. Pero ngayon, dahil din daw tinaasan sila ng kanilang mga supplier, around 180 pesos to 200 pesos ang presyo per kilo. Pero what they do, for some of them, they pack red onions in 2s or 3s depending on its size and weight. And then binibenta nila ito ng 20 pesos per pack. Ang kamatis, 60 pesos ngayon, around 80 pesos to 90 pesos. Ang lettuce, 60 pesos to 70 pesos. And the same goes naman para sa mga bigas natin, nananatiling nasa 38 to around 43 pesos yung price range nila with regular meal dito or premium rices natin. For the meat, same din, nananatili pa rin naman daw yung presyo nila. Yun nga lang, pagdating doon sa mga nakausap nating consumer, halimbawa, we've spoken to a mom from a family of 6, hindi raw nila nararamdaman kung meron bang pagbagal sa pagtaas ng mga presyo or kung bumaba man yung presyo nitong basic commodities nila. So what they do, for example, sa kanila, daily ang ginagawa na lang daw na budget is 600 pesos. 300 for lunch, for dinner, pagkakasya, hindi nila yung natitira kung sakali man. And part of the problem is, meron kasi silang mga pending loan, itong ma'am na nakausap natin. So, ina-allocate na nila ngayon ng sobrang strenuous yung budget nila just to make sure na hindi mabubutas yung kanilang mga bulsa while also catering sa pangangailangan ng kanilang pamilya. Cathy?
Yun nga isa sa mga problema, no? Bumabagal ang pag-increase ng inflation or presyo ng mga bilihin pero nagsisitaasan pa rin. Yun nga lang bumabagal. Pero meron tayong karagdagang problema na maraming meron pang pagkakautang.
Tama yan, Cathy. Same goes din hindi lang doon sa loan. Even ang credit cards ngayon, inamin nila na lalong-lalo na para sa mga estudyante na meron lang silang usual allowance talaga per week. Pero hindi nila maiiwasan, nakakailanganin din nilang gumamit itong credit card just to cater doon sa iba pang nilang pangangailangan sa school or other personal needs and necessities nila. That's why ngayon ang nangyayari, umiiwas daw muna sila sa fast food or yung mga magagarbong kailangan nilang pagbilhan. Ang gagawin daw nilang priority talaga, ano yung magagamit talaga at kakailanganin nila. So rice, eggs, basic needs na kaya nila, yung gulay daw na hindi agad-agad mabubulok, para yung shelter life nito or yung storage life, especially for those who are living in dormitories na pwede naman yung light cooking, kakayanin daw ng budget nila. Pinakausap natin na estudyante, ang allowance nila per week is around 1,500 to 2,000. Pero kasama na rin daw doon yung expenses niya bilang estudyante. So, very tight talaga ngayon yung gastusin ng mga Pilipino dito.
Ay nga, siguro hinay-hinay muna sa milk tea, ano? Salamat, mobile journalist Merimon Reyes. Well, President Bongbong Marcos will tackle proposals from the Agriculture Department to halt rice importation and raise tariffs on foreign grains. The DA's advisory body recommends reinstating higher rice import tariffs of 35% from the current 15%. Marcos slashed levies in June 2024 through Executive Order Number 62 to help lower soaring prices of rice in the retail market. The rate is subject to review every 4 months, and according to a DA spokesperson, Arnel de Mesa, the time is now ripe to bring back steeper duties.
Ngayon ay nasa level na ng 300 plus or less than $400 per metric ton. At napakaganda rin ang ating lokal na produksyon. In fact, we had the record harvest for the first semester of the year. Again, binabalanse ng kagawaran yung tawag dito kapakanan ng mga magsasaka and of course ng ating general public para hindi magkaroon ng shock sa merkado kapag bibiglayin yung 35%.
Presidential Communications Office Chief Dave Gomez has confirmed DA's proposals to protect local farmers from incurring losses, as palay prices now range between 8 and 12 pesos per kilo. Gomez said, and we quote, "The cabinet will discuss this urgent matter with the president in India on the sidelines of his state visit." Marcos is in India until August 8th. SINAG Executive Director Jason Cainglet says it is not an option for Marcos to delay increasing tariffs to October when Congress is in recess. Former Agriculture Undersecretary Fermin Adriano proposed a tariff system, telling Business World lower duties should be charged during off-peak seasons and raise them during local harvests. Meanwhile, Senators Riza Ontiveros and Kiko Pangilinan filed Joint Resolution Number 2 seeking to revoke Marcos's authority to unilaterally adjust rice import tariffs. Both lawmakers want this power to be the sole purview of Congress. Get a lowdown today of July's inflation result with the research head and chief economist at Security Bank, Angelo Jello Taninco. Good to have you again, Jello. Welcome to the program.
Thank you for having me, Cathy.
All right, so you predicted 1.2%. It's far slower than forecast. What do you make of the result?
Well, indeed, it's a downside surprise on the July inflation print, and that's within the BSP's target range. So I think it's mainly due to the lower food inflation. If I'm not mistaken, it has turned negative already last month, primarily because rice inflation continues to be at mid-teens negative rate. And also, for that report, we saw vegetable prices, I think, lower together with fruits. So mainly the food inflation slowdown has driven CPI inflation to be lower.
You know, that's a conundrum. It's turned negative, as you mentioned, but then when you check at the markets and with people, inflation is still a big concern. The latest Pulsation survey said it is their biggest concern, even as inflation is slowing. Why?
Well, over the past 3 years, we saw cumulative inflation reaching, I think, mid-teens for 2022. It was close to 6%, similarly in 2023. And 2024, it went down to 3.2%. So the rate of increase in consumer prices over the past 3 years were faster, but now it's at a slower pace. But the current price level remains, I think, elevated compared to, let's say, over the past 10 years or so.
Why is that the case, that the price remains elevated? What's keeping that from coming off?
Well, we rarely have what we call deflation or falling prices. just like in the case of Japan a few years back. So we continue to have sequential consumer price increases on a month-on-month basis. I think in July it was 0.2%. And we think that for this month of August, there could be some spillover effect coming from the tropical storms that occurred late July. And therefore, that could bring CPI inflation back above 1% for this month and also for the subsequent months.
So it's really cumulative effects, and then the household debt, which also becomes a problem because people don't want to spend more knowing that they have a lot more debt to pay.
Yes, last night we saw also the latest Universal Commercial Bank growth on loans. It was, I think, at 12% year on year for the month of June. But in terms of the loans for household consumption, it was at 24% year on year. And this has been the case for several months already. So households continue to depend on financing to support their daily spending needs.
Rice is very important as that comprises the biggest portion of our CPI basket. Now the government is talking about increasing tariffs on rice to 35%. What impact do you think this might have on inflation? Could it bring inflation back at a faster rate, and how quickly?
Since the tariff cut was made in July of last year from 35% to 15%, that contributed to the decline in the inflation in the second half of last year up to the first half of this year. If the government will raise the tariff rate back to 35%, then CPI inflation will, of course, go up, but we estimate it could be 30 basis points higher for the overall CPI inflation. But rice inflation, which has been in negative territory over the past 7 months, will likely be positive again. And that's also partly because of base effects, since global rice prices have been much lower this year compared to last year. So the tariff rate hike will clearly raise inflation, but at a modest pace, we think. And therefore, the full year inflation this year will still be lower compared to last year's 3.2%. With our full year forecast pegged at 1.9%.
So does it make sense to actually raise tariffs at this point or at all? What's your opinion as an economist?
Well, I think in order to raise tax revenues, that will be a help in terms of contributing to the narrowing of the fiscal deficit by improving the tax effort of government. And therefore, given that inflation is already benign, it may be a good time to start raising the tariff because it will not exert that sharp inflationary pressure, as inflation will still remain within the central bank's 2 to 4% target at a lower end, or perhaps a notch lower than the minimum of the target.
So taken all together of what we've discussed about the potential of higher tariffs in rice and also household debt and also the pace of inflation at which it is increasing, what then for the Bangko Sentral? Does it have more room to lower interest rates?
Well, with this downside inflation surprise, this provides more room for the central bank to continue its monetary easing, as it already signaled to the market more rate cuts, at most 2 by year end. But for us, we think that they will still look at the upcoming second quarter GDP growth data. Our forecast there is at 5.6%, which I think is a notch higher than the consensus of 5.5%. But if it turns out to be another downside surprise for the GDP, then probably the central bank could cut another 25 basis points in order to underpin economic growth at a time when inflation is already benign.
Just as a final point, that 75 basis points of a rate cut in totality, what impact then would that have on the peso?
Well, clearly, this will exert depreciation pressure on the Philippine peso. Yesterday, the peso strengthened sharply by more than 1% in reaction to the weaker than expected U.S. labor market data. So the dollar peso already trading below 58. If it continues to trade close to 57, which is, by the way, our year-end target, then we think that the peso will still be resilient in light of these headwinds down the road in terms of higher inflation and still growth at sub 6%.
Got that. Well, thank you so much for the update. Jello Taninko of Security Bank joining us there for his insights. Well, President Bongbong Marcos has received a list of individuals allegedly involved in corruption tied to the government's flood control projects. The president highlighted the issue during his recent State of the Nation address, pointing out that over 980 billion pesos has been spent on flood control in just 3 years, yet many areas still see no results. In his recent podcast, Marcos said it is clear some officials are neglecting their duties, calling it a joke.
Sabi ko, kalukuhan na ito. Maliwanag na hindi ginagawa ang trabaho. Di natin ginagawa dapat ito sa kababayan natin. Kasalanan na ito.
Marcos has also ordered an audit of the projects but made it clear the DPWH will not lead the probe. The goal is to find out whether projects are truly delayed or deliberately left unfinished. Marcos warned that anyone proven guilty, even longtime allies, will be held accountable.
Sorry na lang. Hindi na kita kaalyado kung ganyan ang ginagawa mo. Ayaw na kitang kaalyado.
And you're watching Money Talks. Coming right up, President Marcos set to meet with Indian Prime Minister Narendra Modi in a few hours. And Rex Daryanani of the Federation of Indian Chambers of Commerce and Industry joins us live from New Delhi. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. equities jumped overnight this Monday as investors ramped up bets the Fed will cut rates in September. The Dow snapped its 5-day session losing streak, closing the session higher by 1.3%. S&P 500 ticked up by about 1.5%, and the Nasdaq advanced by nearly 2%. The 10-year U.S. Treasury yields fell 1.197%. Gold prices climbed to $3,374 per troy ounce. U.S. futures point to slight gains when the markets open later tonight Manila time. The Dow is up by 0.1%, and both the S&P and the Nasdaq rise by 0.2%. Asian markets advance in the first hour of trading this Tuesday. South Korea's Kospi leading equities, gaining 1.6%. Australia's ASX 200 up by nearly 1%, and Japan's Nikkei 225 rise by 0.4%. And a quick check on our market and see how the PSCI is opening up this Tuesday. Looks higher by about 0.1%, 6,355. The stock market closed yesterday higher by 0.6%. Regina Capital said investors resumed their bargain hunting activities ahead of the release of economic data, including today's inflation and GDP on Thursday. The broader all-shares index rose by 0.4%. And the Philippine peso opens today weaker at 57.42 the dollar. Peso surged back to the 57 level yesterday, closing at 57.29 against the greenback. As for the 10-year government bond yields, they've ticked down to 6.158% from the previous close of 6.203%. President Bongbong Marcos kicks off his 5-day state visit to India with a meeting with the Filipino community in New Delhi. For more on this, let's go to our mobile journalist, Julie Baiza, who's covering the president's visit. So, Julie, what did the president have to say and what is in his schedule?
Good morning, Cathy. President Bongbong Marcos is set to receive a ceremonial welcome this morning at the Rashtrapati Bhavan, India time. He will personally welcomed by Indian President Draupadi Murmu and Prime Minister Narendra Modi. Following the welcome ceremony, PBBM will lead a wreath-laying ceremony at Rajghat, or the memorial dedicated to Mahatma Gandhi. At noon, President Marcos and Prime Minister Modi will hold a bilateral meeting, which will be followed by the signing of bilateral agreements and a joint press statement. During this state visit, 6 agreements are expected to be signed between the Philippines and India. These include cooperation on law enforcement, culture, and science and technology. At 7 p.m., the president will have another bilateral meeting, this time with President Murmu. A state banquet hosted by Murmu in honor of the president will also follow. Aside from bilateral meetings, the president is also scheduled to meet with key players in India's business sector tomorrow. Mobile journalist Julie Baiza, We Are One News.
And the Philippines and India celebrate 75 years of diplomatic ties with increasing trade and investment activity, as well as engagements in new and strategic sectors such as defense. Bilateral trade between India and the Philippines reached approximately $3.5 billion in 2024, growing 8.6% year-on-year, with a balance favoring Indian exporters. India primarily supplies pharmaceuticals, automotive components, and agricultural products to the Philippines, while the Philippines exports electronic goods, machinery, and select agricultural commodities. And with us now for more is a member of the delegation of President Marcos in a state visit to India, Chairman of the Federation of Indian Chambers of Commerce and Industry, Rex Daryanani. He speaks to us live from New Delhi. Good to have you with us, Rex. Welcome to the program.
Thank you very much. Mabuhay and namaste, everyone.
Right, namaste. Rex, what is the mood like in those high-level conversations? Because it's coming under the pretext of all the tariffs that we've been faced with Philippines at 19%, India 25%.
You know, Kathy, the talks are only beginning today, but everybody's really excited. India and the Philippines are writing a new chapter in our shared story, one of deeper friendship, strong trade, and brighter opportunities for our people. This visit is really more than diplomacy. It is a shared vision for an Indo-Pacific anchored on trust, innovation, prosperity for generations to come. When government shakes hands with businesses and businesses join forces, nations rise together. And that is exactly what India and the Philippines is doing today.
Well, let's take it from the perspective of defense, because there's a partnership in defense highlighted by the BrahMos missile delivery and this month's first bilateral maritime exercise in the West Philippine Sea. That marks a turning point in strategic cooperation.
Absolutely. You know, our focus really is on strengthening mutual trust, enhancing trade, and building partnerships that bring peace, stability, and prosperity to our region. India is a major player in the defense field, and it's great that the Philippines is now engaging with India. This will ensure internal and external security and allow our forces to train side by side with our Indian brothers and sisters.
And of course, trade, bilateral trade has grown to $3.5 billion with promising complementarities there that I'm seeing in pharmaceuticals. IT-BPO, what are the biggest growth opportunities that you're seeing for Indian investment in the Philippines?
You know, Kathy, we see still very strong investment in pharmaceutical and the IT-BPO. Agriculture plays a very big role here as well. I'm personally excited on the prospects of increased tourism between our countries. When we enhance people-to-people interaction, then business just flows. So we're excited. Secretary Frasco's here. We're also going to be meeting with her, with our partners in India, the chamber here, and we hope to get the Indian side to help us as far as tourism is concerned.
Right, on tourism, the visa-free entry, I mean, how is the recent visa-free entry benefiting arrivals here in the Philippines? What are the numbers looking like so far?
So I'm told I had a quick talk with the Indian ambassador, and we see an uptick. The visa-free for Indian nationals is really something that we've been praying for, we've been asking for, we've been advocating. It's about time. Indians are not just great tourists. We also have a lot of business people that travel to the Philippines, and this visa-free era is going to boost that even further, most especially with the start of the direct flights starting October 1.
Tell us more about that. I mean, what sort of direct flights and what's the frequency and where to?
Yeah, what I understand is Air India is flying daily flights from New Delhi effective October 1. We are looking forward to other airlines following suit. And this is the reason why our working together to boost tourism, both inbound and outbound from and to India, is something that we're hard at work at.
And it also boosts the possibility that Indian business might want to invest in the Philippines. What's the likelihood that both governments would accelerate the signing and implementation of a preferential trade agreement? Because I was speaking with USEC Rose Edilion of DepDev yesterday, and she said that that's something that we're hoping for, that we could have that preferential trade agreement between India and the Philippines and not do it through ASEAN.
You know, as far as we are concerned in the business sector, remember the ASEAN-India Free Trade Agreement is already in place. And this visit is just going to further enhance that, and it's already there, and people just need to start using it.
Okay, so as business communities look to deepen ties, what sort of barriers are you seeing need to be removed to make it easier to do business in the Philippines, if we're talking about the Indian investors and for Philippine investors to do business in India?
You know, we've come a long way, right? And where we have the anti-red tape authority in the Philippines. It's made a lot of things easier. And I'm just very optimistic. Yes, we have our bottlenecks, we have our obstacles, but that's what our chamber is there for. Our chamber is committed to all investors from India to assist in whatever way possible the moment they start investing in the Philippines.
Could it be bigger this round? The last one that you went with in the previous administration, I mean, give us a comparison. What you would come home to after the state visit from India?
You know, I'm not going to preempt the government. I'm sure they'll be coming up with their announcements soon. But I am way more bullish this time because now I think both the Philippines and India realize the value of each other's good and close partnership. The tone is much better. Everybody's excited of doing business with each other. And I'm just very optimistic, and I see this as a really good sign that this state visit is happening. And you asked about the pulse. It's a pulse of excitement.
All right, well, keep the optimism and keep us updated as you should. Rex Darianani of the FICCI joining us live from New Delhi. Over in corporate news, Meralco has signed a 20-year power supply agreement with First Quezon Biogas Corp, or FQBC, to source renewable energy from a 1.4 megawatt biogas plant. The power distributor says it will draw 1.25 megawatts from FQBC's biomass power plant in Candelaria, Quezon Province, which converts agricultural waste into electricity. Meralco Senior Vice President and Head of Regulatory Management Jose Ronald Valles hopes the deal spurs more biogas investment to communities and advance RE technology. Meralco said the plant also offers a sustainable waste disposal solution while cutting greenhouse gas emissions. The agreement is set to take effect in June 2026, pending review and approval from the Energy Regulatory Commission. Meralco and Signal, the owner of this channel, are both part of the MVP Group. SM Prime Holdings booked a record of 24.5 billion pesos in its first half earnings, up by 11%, driven by higher rental income, real estate sales, and ancillary services. The real estate giant said its revenues rose 5% to 68 billion pesos, with rental income from malls, offices, hotels, and MICE events making up 60% of the total. Meanwhile, malls alone contributed 17 billion pesos, or 69% of profits on new openings, high foot traffic, and strong occupancy. SM Prime President Jeffrey Lim said these results underscore the resilience of their businesses and strength of their diversified portfolio. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.